We know rents have been absolutely crazy lately. When we saw the average cost of a 3-bedroom apartment is over $1,600 in places like New York, our jaws hit the floor. At first, we thought there must be some kind of mistake. But unfortunately, the extreme price hikes are very real. Hello and welcome to Wealth. In this video, we'll highlight 7 monthly dividend stocks that will pay your rent, and you may be pleasantly surprised by how little you need to invest in some of these to generate dividends covering typical housing expenses. Sound good? Okay, let's get started. EPR Properties, or EPR. Kicking off our list of monthly dividend payers is EPR Properties, ticker EPR. This unique real estate investment trust, or REIT, specializes in owning experiential and recreational properties like movie theaters, ski resorts, golf complexes, and even charter schools. EPR secures reliable rental income from these properties through long-term triple net leases with operators, meaning tenants handle building insurance, maintenance, and taxes. Now, the COVID pandemic did significantly impact many experiential property types as temporary shutdowns hurt operators' ability to pay rent. This forced EPR to suspend its dividend for a period back in 2020. The good news is most tenants have since rebounded to normal operations. And some categories like ski resorts and gaming are even seeing higher demand driving profits up. However, movie theaters still lag behind pre-pandemic performance levels. With theater operators representing over 40% of EPR's portfolio, management is working to reduce exposure to this volatile segment. But a decent rebound is expected here too in time. Despite some pandemic adversity, EPR Properties has restored its high 7.7% dividend yield, paid monthly. That means a $10,000 investment would throw off around $64 per month. Not huge, but a nice predictable stream to help with the bills. And beyond just the dividends, EPR offers nice growth potential if its property portfolio returns to full strength after weakness these past few years. So all in all, some turbulence lately for sure, but we still think EPR can be an excellent monthly dividend payer, especially at its lower valuation today. Next up, let's explore an ultra-steady REIT with over 25 years of dividend growth. Agree Realty, or ADC. Up next is another REIT, this one focused on retail properties. Agree Realty owns freestanding stores leased out to retailers like Walmart, Dollar General, CVS, you name it. These are all necessity-based stores that tend to do well even during recessions. People always need their groceries, medications, and cheap household items. So Agree Realty's tenants are dependable, which makes those rent checks consistent. The dividend currently yields about 4.5%, which is lower than some others on our list, but still very solid. And Agree Realty has increased the payout every year since going public in 1994. That's some nice dividend growth you can count on. With stable tenants and steady dividend hikes, Agree Realty is a lower risk way to collect a monthly income. The 4.5% yield may not cover your whole rent, but it can take a nice chunk out of it. Gladstone Commercial, or GOOD. Alright, company number 3 is Gladstone Commercial, another diversified REIT. They own a mix of office, industrial, and retail properties across the US. Now keep in mind, Gladstone had some struggles during COVID and actually had to cut their dividend at one point. But the payout has stabilized now, and management has been working hard to improve their portfolio. Today, Gladstone yields about 9.7%, which is tremendous. That jumbo dividend can cover a huge portion of anyone's rent payment. And the payout ratio is still reasonable, so the dividend should be sustainable for now. Long term, we'll have to see if Gladstone can get back to consistent growth. But for high current income, it's one of the best monthly dividend stocks around. LTC Properties, LTC. Up next is LTC Properties, which owns senior housing and healthcare properties across the US. They operate under a triple net lease model, like the other REITs we've discussed. Now, senior housing did take a hit during COVID. Several of LTC's tenants had trouble paying rent for a while there, but collections have improved and LTC's dividend made it through intact, which is good to see. Today, the yield sits around 7%, which again is way above average. That hefty monthly income can be a big help with rent or other housing expenses. One thing to note is that LTC hasn't increased its payout since 2016, as it's still recovering from COVID issues. But the dividend appears safe for now, and you can collect that big yield while you wait for growth to return. Overall, LTC is a reasonable option for monthly passive income at the moment. Realty income, or O. Up next is the legendary Realty Income, which calls itself the Monthly Dividend Company. They've paid steady monthly dividends for over 25 years and raised the payout 108 times. That's some amazing dividend history right there. Consistent raises year after year makes Realty Income a favorite among income investors. Although the yield is lower at around 5%, you can count on those dividend hikes over time. Realty Income owns freestanding retail properties occupied by high-quality tenants. Think drugstores, convenience stores, gyms, businesses we all rely on. This lends stability to the rental income, which supports the payouts. Sure, the starting yield isn't sky-high, but when you add in the dividend growth, Realty Income is still one of the best monthly payers out there. Those increasing payouts will slowly but surely help cover more and more of your rent. SL Green, or SLG. Alright, on to the next one. SL Green is a major office landlord that owns prime properties in New York City. We're talking Class A space and iconic skyscrapers, super high quality. Now, SL Green did run into some COVID headwinds that forced them to cut their dividend briefly. But the payout has stabilized now and yields around 12.5% today, one of the very highest on the market. They've also made good progress leasing vacant space and shoring up their balance sheet. So while office demand is still recovering, SL Green appears to be through the worst of it. All in all, if you can stomach the risk, SL Green offers a 12% plus yield that can single-handedly cover rent plus utilities and then some. Just brace yourself for potential volatility as the office market still faces some uncertainty, but the reward potential is pretty spectacular here. Stag Industrial. Stag. Last but not least is Stag Industrial, an industrial REIT that owns warehouses and distribution centers. Industrial real estate has been red hot thanks to the rise of e-commerce. Stag's occupancy rates and rental income have been very stable as a result. Although the dividend yield is lower at 4.1%, they've increased the payout steadily for years on end. Stag just keeps expanding its portfolio, adding new properties every quarter. This drives consistent growth in the dividend over time, which helps it keep pace with rent increases. The yield may not cover all your rent to start, but those annual raises will close the gap. So in summary, Stag offers reliable monthly income that should gradually cover more of your housing costs. It's lower risk, but still nets you a growing payout. Alright, there you have it. 7 monthly dividend stocks that can contribute toward paying the rent. They offer yields ranging from 4% to as high as 12%, with most landing in that 6 to 8% range. Even a 4% payout can make a decent dent in housing costs, but 8% plus will cover a huge chunk, if not all of it. The key is combining both high yield and dividend growth. Locking in yields above the market average provides lots of immediate income. Meanwhile, steady growth allows that income to rise over time, keeping up with rent hikes. Together, they can make rent less and less of a financial burden. So check out these 7 monthly dividend pairs. Find a few that fit your risk tolerance and start putting those dividends to work. They can provide recurring cash flow that coincides perfectly with your monthly housing payments. A little planning and the right stocks can pay big dividends, literally.